What's up, everybody? Doriso here for another episode. Talk about bumps in the journey to building a stock portfolio from $0 to infinity. We are seeing records being broken left and right. Are you building your stock portfolio as high as possible? If so, click that like button. Let's see if we can get 14 likes. So let's get into this one. Navigating the changing tides of the stock market with a level minded emotional state is very important for any stock market investors looking to grow their money over the next 30 plus years. What kind of behavioral impulses are going on right now in the market? I believe there's a lot of emotional selling going on with these market swings down. US stocks kicked off the week on an ugly note with the Dow Jones Industrial Average shedding 2,997 points or 12.93%. The S&P 500 and Nasdaq plunged 11.98% and 12.23% respectively. The Russell 2000 was the weakest of the major averages, crashing 14.27%. Even Wall Street's fear gauge closed at its highest level ever, surpassing the financial crisis peak back in 2008. The Volatility Index, or VIX for short, is the fear gauge on the overall stock market. Investors are getting emotional, and fear is clearly building higher and higher. For any beginners looking to start investing in the stock market, remember that investors have a knack for piling into investments at market tops and selling at the bottoms because of all the hype and fear that is put out there on TV and social media. I believe social media has everyone connected today like never before. This means if you live on this planet, you have an understanding of what's happening in the news. If you turn off your phone or the internet, I'm sure you'll find out something is going on when you go to your local grocery store and find out that there's no toilet paper and the majority of your preferred brands of food and product are out of stock. The supply chain has been disrupted and the shortages are being seen on local grocery runs. The key to investing in the stock market is to understand the motivations behind emotional investing and to avoid both euphoric and depressive investment traps that can lead to poor decision making. Are you planning to buy investments at peaks and sell during the valleys of the market cycle? Be careful out there. I mentioned this in earlier episodes. The stock market doesn't just go up. The stock market goes down and also sideways. There are cycles to the stock market, and right now, stock prices are falling down at a rapid pace. Do I like the motto of buy high, sell higher? Sure, I do. That motto has made investors a lot of money over the past decade of the bull market. I also like the strategy of buy and hold, along with following up with the company's bull thesis on a regular basis. Now we're in bear market territory. The historic bull market came to an end last week. We're embarking on a new terrain that we haven't seen in the past 11 years. It's kind of like a new map in one of your favorite video games. You are clueless to your surroundings until you play the map over and over again and become more familiar with the environment. This environment in the investing world is called the bear market. Stocks have sold off more than 20% off recent all-time highs just a few weeks ago, and new beginner investors with little money want to start investing or want to quit because they lost a lot of money these past couple of weeks. Quick tip: your hard-earned money in the stock market isn't lost until you click the sell button on your screen. A question I have for all investors that have sold all their stocks or a large percentage of their stock portfolios is, what metrics will you wait for before you buy stocks again? Will you wait until the market goes down another 30% from today's levels? How about a decline of 50%? Just so you know, if we hit those declines in this market, I highly doubt you will be in an emotional state to start buying stocks. It's much easier said than done, especially when we're in a global recession and people are losing their jobs, companies are going bankrupt, foreclosures hit the housing market, car dealerships are sending the repo trucks to pick up cars from people that haven't paid their bills on the first of the month. These things will occur if the stock market continues to fall to record lows. Scary stuff, sure, but that's why you're listening to this episode right now. Your brain needs to hear level-headed advice and tips to get through a bear market rather than screaming talking heads on TV panicking in times of stock price discounts. Remember, a bull market will be back. They always come back, looking back at the history of the stock market. Over my investing career, I learned this time is different can be the four most expensive words to say when you're staring at stock tickers tumble down day after day. With my stock portfolios, I am being very selective when it comes to portfolio management in a bear market. I want to prioritize companies with healthy balance sheets that can weather the storm and survive tough times like I previously mentioned. I prioritize net cash positions and overall company solvency. Solvency is often used as a measure of a firm's long-run financial health. For any beginners looking to start investing, solvency is the ability of a company to meet its long-term debts and financial obligations. Solvency is essential to staying in business since it confirms a company's ability to continue operations into the foreseeable future. A company that is insolvent will often enter bankruptcy. Think about what happened to Toys R Us and Blockbuster. Those companies got disrupted and struggled to grow during tough times. Once revenues fell, their balance sheets got hit so hard and they couldn't survive, so they had to file bankruptcy. In times of panic and fear, players like Warren Buffett seek value and pounce on investment opportunities at discounted rates. Do you think he's eyeing those airline stocks with his cash account right now? Airline stocks and cruise line stocks are getting hammered right now because of the shutdowns going on. Will things eventually get back to normal and open up? I believe so. It just takes time. Will investors with plenty of cash in hand eventually buy up these discounted stock prices? That's a logical conclusion. Airlines, in my opinion, will always operate. Who controls the airline assets? The market will always transfer control from the people that panic to those investors that are patient. As always, let's take a look at my stock portfolio that I've been building from scratch, and I've been providing an update in all 22 episodes. If you've been following along, I've been growing this portfolio starting at $0 and building it to infinity since there's no limit to how high it will go. I created this channel mainly because I knew there was a need for young investors looking to start their personal investment journey. If I was 15 years old again and I saw my stocks decline 40, maybe 50% in a couple of weeks, I would think the stock market is a scam and you can't make money. I'd probably sell everything and sit on the sidelines while I played some video games. This logic is why it's important to read and learn about the stock market. I believe there is no better time to learn about the stock market than right now. You only lose your money if you sell. For this reason, I have redesigned my portfolio update screen. I made this change primarily for beginners looking to get started investing in stocks. Since my investment strategy for the past 10 years has been a long-term mindset, what is the point of showing today's gain or loss when I have no plans to use this money for the next couple of years? Beginner investors need to realize that you are investing in actual companies and brands that exist in real life and not just as a stock symbol or price on your phone. I believe there's an emotion tied to opening up your account or stock app like Robinhood or Webull. When you open up your stock portfolio and see red colors and a line falling down with a minus sign next to your portfolio value, what kind of emotion comes to mind? Sadness, anger, fear, the list goes on. These emotions ruin your chance of being a successful stock market investor, which is probably why you are listening to this episode. Peter Lynch has some solid advice for small investors in my very first episode with $0 in the thumbnail. He explained the market does go down and sometimes goes down a lot, like we're seeing right now. Lynch emphasizes you need to know what you own at all times and you need to take advantage of declines in prices. For these reasons, when looking at my portfolio, I think the most important metrics to look at for beginners is the company you're investing in, the current value of your stock and cash positions, the quantity of shares you own, and the current cost per share. There's no need to see red or green since those colors will affect your emotions. Red being a bad day in the market and green being a good day in the market. The goal should be to increase the amount of shares you have in each company you own that you personally believe are undervalued. If the stock price goes down and is cheaper tomorrow, that's a good thing if you don't have plans of selling anytime soon. The main goal for any investors out there is to continue to build the size of your stock positions each and every month like I am doing for my portfolio. The portfolio on your screen is only a little over $2,400 since I'm only investing with little money at this time. Think about it. We aren't working with $100,000 or $1 million at this time. Those types of numbers will be under management in the future, but for now, we are starting at $0. Everyone starts at $0. $2,400 is such a small figure when we look back a couple years from now. My contribution amounts will continue to ramp up as we move along towards infinity. This may be one of the best times in history to start investing in the stock market. If the share price of any company I own is cheaper than my current cost per share, that should be looked upon as great news when you have a long-term outlook on investing. A beginner's main goal with a portfolio, especially under $10,000, should be to continue to build the quantities of shares in all holdings as much as possible. Keep in mind, you may want to limit the exposure that you have to certain industries depending on where we're at in the market. Airlines and also cruise lines are two that come to mind at this time. No one really knows the bottom, and that's the thing. Do you really want to invest in companies that have exposure to those two industries? Another rule of thumb that I personally use, I never invest money I need for tomorrow. This strategy is highly recommended for all beginners. This should light a spark of finding ways to make more money in your daily life so you can invest and accumulate more and more assets each and every month. Everyone is at their own pace. If any questions come up, feel free to leave a comment and I'll do my best to get back to you. Let's end it there. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment and informational purposes only. Let's keep building from $0 to infinity. Hold on tight for the ride. The ride is a bit bumpy at this moment. Remember, better things are always ahead. Keep those emotions in check. Peace.